Bismillahirrahmanirrahim. Assalamualaikum. I am Janhatul Aliyah binti Zahrizan. I am your moderator for today and we will conduct a forum on how golden are your golden years. I would like to introduce our guests for today. The first one is Miss Nur Aini binti Muhammad Aris, a student from a local university. Next, a financial advisor who is very reliable in her career, Miss Nur Zur Atirah binti Zailan. Next, our economist, Mr. Amir Haikal bin Azhar. Next, a KWSP employee who is very experienced, Nur Alia binti Yaakob. Last but not least, an investment expert, Cik Nur Shukrina binti Azlan. Let's start our forum with Miss Aini. What do you want to tell us about your parents who are retiring now?
Hi, Assalamualaikum. Thank you, Miss Jannah. It's my pleasure to be invited to this forum. As mentioned before, my name is Nur Aini binti Muhammad Aris and I am a finance student from a local university. As I am the youngest amongst all of us, I didn't have so much knowledge in this industry, but I want to share some of my experiences. The reason why I did share my experience is because I need to gain some knowledge for me in the future on the retirement planning so that I wouldn't repeat the same mistakes. First of all, this is based on my own experience, which is both of my parents are pensioners. My mom is a government pensioner, while my father is a private pensioner. When we talk about government pensioners, we know that they will get pension money on a monthly basis, right? But when it comes to private pensioners, they will get the money on a lump sum. So they need to manage it carefully so that that will no issues arise in the next 10 to 20 years. And we also cannot predict the future. For example, the pandemic of COVID-19 that hit the world recently. People are affected badly, especially in economics. Some of them need to use anything that they have to survive. I am forever grateful that we can go through this together. But there are many issues that arise during the pandemic period. Basically, the problem is my dad's pension money is getting less day by day, and some of them are reserved for emergency users. Then, my daily expenses depends on my mother. But during this hardship, which is the pandemic of COVID-19 and also inflation, I did not think that we could survive for another 2 or 3 years. But this is only what I predicted with my little knowledge. Consequently, this is the main reason why I joined this forum. I want to know a clear plan, always, and also opinions from the experts for me to follow on how I can manage my money in the early years for the saving so that there would be no problem when I have retired. Thank you.
Thank you, Aini, for your sharing, which is very instructive for us to always not be extravagant in using our own pension money. Next, I invite Ms. Zuratirah to share what the planning for young people should do now for them to face in their old age later.
Thank you, Ms. Jana. Today, I would like to share with you 4 important things that you will need to know when planning for your retirement date. So, first thing, you need to estimate your current expenses and your future retirement expenses, such as small leisure travel or your medical bills or your pending housing loan. One of the biggest mistakes that people make during the retirement years is not practicing a budgeting habit. So, please take note about this. Secondly, prepare your umbrella. So there will be 2 things you need to prepare. One would be your emergency saving and another one would be your medical insurance. For emergency saving, it is recommended for you to have at least 24 to 60 months of your expenses. This is to ensure that you have more liquid fund available. Next, for medical insurance, if you are under company coverage, make sure that your coverage can still continue to run even after you leave the company. If you do not have a medical coverage, then you should go buy it now. As insurance is the cheapest today because as you grow older, your insurance premium will increase along with the age. Thirdly, plan when and how you want to withdraw your APF. If you are planning to withdraw all of your APF fund, you must consider where to put this fund so that it can continue to generate a good interest return for your money to last longer. If not, you have an option for a monthly withdrawal from your FPF account directly through your bank account. And lastly, it's good to have a few passive guaranteed income streams so that you can make sure that your retirement fund can last longer. For example, fixed deposit. Fixed deposit can generally give you a guaranteed return of 3% to 4% per year. Because of the low risk, I think it is suitable for young people to give it a try. So that's all from me. Thank you.
Thank you, Ms. Zur Atira, for the very detailed planning for today's young people should have done. Next, I invite Mr. Ameh. Since you are an economic expert, can you give your thoughts on retirement planning from an economic perspective?
Thank you, Ms. Jana. Now, from an economic perspective, we have to look at how well the economy of a country is doing. For example, a country that faces inflation will have several impacts on the retirement planning of their citizens. Inflation affects the prices of consumer goods and is used as a benchmark by the government to determine whether to increase contributions limits to qualified retirement plans or raise monthly social security benefits. Moreover, if a person's retirement income does not increase in line with inflation, then they would have a difficult time to spend their money on important necessities such as medical and healthcare. This is due to the prices of goods rising from inflation, and the more time goes on, the more difficult it is for them to manage their money. Healthcare isn't the only item that can drive up a person's expenses. Housing, travel, and supporting adult children could also influence how much seniors spend. The primary concern for retirees is how inflation affects their purchasing power. This is true even if inflation remains low because seniors are more likely to spend money on things that tend to increase in price, such as healthcare. Therefore, it is very important for a person to have several other income sources, such as investing, to counteract this problem. Just remember to balance stock investments with more conservative options, such as bonds, which are more predictable and tend to offer stable returns. Another option a retiree could do is reduce housing costs. For instance, trading in a larger home for a smaller one, even if the mortgage is paid, as it can reduce the monthly outflow for property taxes, utilities, homeowners insurance, and maintenance. That's all from me. Moving on to the next panelist.
Thank you, Mr. Ameh, for your good sharing. There's a lot of difference in retirement then and now. Now, I want to ask Miss Alia, as an experienced employee at KWSP, what is the importance of opening an EPF savings account?
Thank you, Ms. Jannah, as the moderator. Hello and Assalamualaikum. My name is Nur Alia binti Yaakob, an employee at KWSP. Basically, EPF and KWSP are the same, which EPF stands for Employees Provident Fund and KWSP Kumpulan Wang Simpanan Pekerja in Malaysia. EPF is actually a risk-free way to save for retirement. These savings are what you will rely on when you retire, and they can also be a safety net in case you lose your job and become disabled. Every company is required to contribute EPF for its staff or workers and to remit the contribution sum to KWSP before the 15th day of the following month. Failing to submit within the stipulated period will result in late penalty charged by KWSP. Employers are required to register with the EPF within 7 days from when they first hire an employee. The importance of having an EPF account are it manages the compulsory saving plan and retirement planning for private sector workers in Malaysia. Membership of the EPF is mandatory for Malaysian citizens employed in the private sector and voluntary for non-Malaysian citizens. As a retirement plan, money accumulated in an EPF savings can only be withdrawn when members reach 50 years old, during which they may withdraw only 30% of their EPF. Members who are 55 years old or older may withdraw all of their EPF. When a member dies beforehand, the EPF fund is withdrawn in favor of a nominated individual. Withdrawals are also possible when a member will immigrate, becomes disabled, or requires essential medical treatment. Members above 55 years old can choose not to withdraw EPF savings immediately and withdraw only later. And under existing guidelines, employers may continue to contribute 12% of the member salaries at their own discretion. So, according to EPF, at the very least, you should have 1,000 a month post-retirement aid at age 55 to 75 years old. This means when you retire at 55 years old, you should have at least 240,000, but this really should be taken as the bare minimum that you will need for your retirement. It is much easier to achieve your retirement goals if you start early because you get to enjoy the benefits of compounding. That's all from me. Thank you.
There is a lot of importance in opening an EPF account. Thank you, Miss Alia, for sharing with us. Now I invite Miss Shukrina. What is your suggestion, the real way to make money from now on?
Okay, thank you, Ms. Jana. Okay, Assalamualaikum and hi everyone. My name is Nur Shnabita Azlan and I am expert in investment. Okay, in my opinion, after listening to the other panel problems such as Aini, where her parents can manage their financially well, so I would like to suggest for those who can make sure their financial consistent where they should start investing starting now. Okay, as you can see nowadays, younger people who start working right now try to buy their digital gold. For your information, digital gold is a good investment for those who want to start thinking about their future. Digital gold is a new age way of buying the yellow metal without to need physically hold the gold. You can buy it conveniently and easily online, sitting in the comfort at your home. Okay, the benefit of the digital gold, it is the high liquid where you can easily buy and sell anytime because the gold has a secure value and it is also convenience and instant purchase and also sale. Other than that, digital gold didn't have a charge where you buy an item unlike the gold and jewelry at store. Okay, my second suggestion is to open an account for ASB account. This type of investment was a very popular since back then. By keeping your money at the bank, you will get dividend in future. And also, putting money there can prevent you from overspending because the procedure to cash out or withdraw the money was a very strict. Recently, government give a Aishitra to the people for them to survive during the pandemic COVID-19. So I hope you guys can try investing more in the future by these two-way suggestion that I already mentioned before, which is the digital goal and open an account for the ASB account for a better future and life. I think that's all from me. I hope those two suggestions that I already mentioned already give to you guys can help those people who want to start saving and plan their financially well in the future. Thank you. That's all.
Thank you, Ms. Shukrina, for your very helpful sharing. After hearing all the opinions on the importance of savings on retirement day, I hope people out there can learn something that your retirement day is very important. That's all from us. Thank you.